Welcome back to Market Day Report in the last half hour of trade. I'm Scott Schulte, otherwise known as the Cow Guy, and I've been with you for the last couple hours, and boy, it's been a lot of fun, actually. How about corn? How much fun is corn today? Let's take a look at that table. 6 1/4 cents higher in September at 5.44 1/4. We've got December up 9 3/4 cents at 5.45 1/4, which is about 2 cents off the highs in Dece, and just seems like we want to get back to that 5.50 level. We'll see. How about soybeans? Here we go. Here's where all the great gains have been. September's up 43 3/4 at 13.37 3/4. We've got November up 40 1/4 now at 13.33 even. How about Chicago wheat? Chicago wheat table. We're rolling over a little bit. How about September's off 3/4 penny at 7.19? Just in the middle of the day's trading range, so nothing significant there. We got a half cent off in Dece at 7.33 even again. Basically in the middle of the day's trading range. How about what's happening in Kansas City? That hard red wheat, Kansas City up 1 3/4 cents in September at 7.06 even. We've got December up 1.5 cents at 7.19. March is up 3/4 penny at 7.27 3/4, and now May is sharply unchanged. How's that? Spring wheat in Minneapolis up 8.5 cents in September at 9.33 1/4. December up 6.5 at 9.12 1/4. So decent gains over in Minneapolis, and I'll just take a quick peek at cotton before we end the day out here. We've got cotton up 31 cents in October at 94.85, and I'm lucky to be joined by Ted Seifried. He checked in with us last week from the Pro Farmer Tour. Ted is with Zaner Ag Hedge, and he's an old friend of the show, a good Chicago guy. Ted, walk me through what you think's happening so far in this grain market today. We've got another half hour left, and then maybe give us a little tidbit about your travels last week.
Yeah, so it is the soybean show today. Obviously, the soybeans are really rather strong today. It's pulling corn along with it, and to some extent, wheat. There are a lot of rumors floating around there out there today, as there always are on days where we're up 40 cents or so. And of those rumors, certainly we've heard that China is buying. And we did see a sale to China this morning of 132,000. But the talk out there is that China might be buying a bigger amount. Now, I don't know if that's true or not. I kind of am a little bit skeptical of that. I think China is being very patient about looking for those seasonal lower prices to come in and step in and be a bigger buyer. But the other rumor, which may have some credence, although I've not yet been able to confirm it, is that the the EPA is walking back the comments that were reported last Friday about dropping the RFS mandates, or the biofuels mandates, below 2020 levels. It didn't make a lot of sense when I saw that on Friday. It makes more sense that they are now saying maybe we didn't say that. I don't know. Nothing confirmed on that. But if you look at the board, the strength is coming in soybean oil. The strength is somewhat coming in corn, and it's not in wheat. So that would make a lot of sense to me. So we'll see. We'll see if that happens or not. It's, in my opinion, not that big of a deal if those mandates aren't there, because RIN prices are good enough that I think we'll continue to blend at higher rates anyway. So I think that demand will be there. But, again, that's part of the reason, or big part of the reason, why the market was so heavy on Friday. So now we're just taking that back, because now we're kind of reversing our position on that. Overall, though, Scott, and we've talked about it a lot, I still think we're in that time of year where we should come down and make harvest lows. And the reason I say that is because at some point we might have to price ration soybeans. But until we have a fairly sizable chunk of that demand on the books, it doesn't make a whole lot of sense to me to go and price ration that here and now, unless there was a major crop failure. And going back to your earlier question, everything that I saw on tour, and while there's still time for the soybean crop to go backwards if those rains miss, but the rains that came over the weekend and into this morning, that soybean crop I think is there. So I don't think we need to see this counter-seasonal harvest rally. I think this, harvest lows, then we rally if we go down and find the demand.
All right, well, we're going to take a quick break. That was a mouthful. Excellent stuff. We'll come back and talk livestock with Ted Seifried after this. Welcome back to Market Day Report. I'm Scott Schulte, otherwise known as the Cow Guy, and this is the last time I can use that as a cheap segue into the cattle market, huh? How about the live cattle? How are they doing today? Let's take a look at that table. These prices brought to us by Bar Chart. October's off 12 cents, kind of quiet, 131.82. We've got December right behind it, up 77 cents at 137.60. Moving right along. What are the feeders doing when we got everything a little bit more expensive on the other side of the ledger? Well, you can see September's off $1.72 at 165 spot 57, but October only off 67 cents at 170 even. Lean hogs, how the piggies doing over here? Pigs are down a little bit. October off 65 cents at 86 spot 82. We've got December off 85 cents at 80.55. So kind of hanging in there, nothing too drastic. We still have with us Ted Seifried. Ted was in the middle of talking to us about what he did last week. But Ted, quickly, what about the livestock, and then anything else you'd like to add after that?
Yeah, sure. Cattle for the most part, you look at October, and while it doesn't have that higher gusto that we had maybe even earlier this morning, but acting kind of like it should at new recent highs, right? And that is sort of, feeling out the territory, the new territory. And I think if we close positive on the day, which looks like we will, this is a good hold of a breakout to new highs. And I think there's more to come. I think there's, with box beef prices being very strong, I think there's more room for cash to go higher. Packers margins are really very good. Domestic demand is very solid. Again, I think there's reason why we are venturing into new high territory. As far as the hogs are concerned, we're starting to try to kind of water down here, kind of like you were mentioning. At some point, I think this is a basis for us to jump off from and go higher once again. I think that October contract at some point gets into the mid to upper 90s. Maybe it doesn't get up to the 112, 120 area that we saw the August get to, but I do think that there is reason to get into higher prices there. So I'm pretty optimistic for the hogs. And then the one thing I want to add on that, crude oil. Wow, what a 2-day rally. That's a reflection of this risk on climate that we're seeing in the markets. Once again, you see it in the stock market making new highs as well. So investors are coming back. That is a really nice thing to see. But that might have just been the low in crude oil. So those of us that are looking and worried about hedging our energy needs, our fuel needs, our diesel needs, I think we need to be looking at that a little bit more right now as well.
Yeah, that was great stuff. Thank you very much. You covered a lot there, and I tend to agree with you. We'll see what crude oil does. That's one of the things I look at every morning as well. That's a harbinger of what the economy may be doing in the near term. So thank you very much. That's Ted Seifried from Zaner Ag Hedge. He's in Chicago, and I'm going to hand it back over to Tammy.